Hi there, welcome to our conversation on the types of assurance engagements. Hello, it's me again, Christine, your auditing theory conversation partner. And previously, we had a very engaging conversation about the elements of an assurance engagement. So if you haven't done so yet, you may want to pay that video a visit. And if you haven't done so yet as well, please hit the subscribe button and give us a follow at Let's Talk Audit and Assurance. So, for this segment, we are going to talk about what are the classifications of assurance engagements. Previously, we ended our video with a talk about what is the difference between a reasonable assurance and a limited assurance engagement. Now, I hope you still remember the main difference between the two essentially lies in the scope of work, in the procedures that can be performed. That being the procedures being performed will eventually affect the risk involved or the reduction of the assurance engagement risk in that particular engagement and can lead you to either give a positive conclusion true to a reasonable assurance engagement or a negative conclusion true to a limited assurance engagement. Again, I invite you to watch our previous video if you haven't yet done so. For this particular segment, though, we are going to start by talking about the classification of assurance engagements according to its structure. And we once again have two classifications. The first one is what we call assertion based engagement, or we would also recognize this one by its nickname attestation. And the other classification is that of a direct reporting engagement. And of course, you guess it right, this is the time where we get to ask the question, so what's the difference between the two? So if we take a look at our framework for assurance engagements, an assertion based engagement or an attestation is defined as one where the evaluation or measurement of the subject matter is performed by the responsible party. Do you remember our storyteller? And the subject matter information is in the form of an assertion made by the responsible party that is made available to the intended users. Now, imagine the financial statements. We know, once again, management is the one responsible for the day to day operations, for the decision making of the business. Management is also the one responsible for the evaluation and measurement of the condition and performance and cash flows of the business and reports this in what we now know as the financial statements, which is a subject matter information. Now, reflect on this for a while. Can there be financial statements without an auditor? Is it possible for us to have financial statements without an external FS auditor? The answer, ladies and gentlemen, is a big, resounding yes. In fact, we do have what we call as unaudited financial statements, right? Meaning to say, with or without the auditor, with or without the practitioner, the subject matter information is made available to the intended users. We need to highlight that. We need to underscore that in the case of our illustration, the financial statements can be made available even without the auditor because when we go to the definition of a direct reporting engagement, you would get to see the difference between these two classifications. In a direct reporting engagement, the practitioner either directly performs the evaluation or measurement or obtains a representation from the responsible party that performed the evaluation or measurement, but then the subject matter information is not directly available to the intended users. This is where the main difference between these two engagements lie. It is in the availability of the subject matter information to the intended users. In the case of a direct reporting engagement, without the practitioner, the intended users will never get hold of the subject matter information. The subject matter information or the report is provided to the intended users in the assurance report. So if we get to reflect on the difference between these two, and like what we have said, the main difference simply lies in the availability of the report. And we have already illustrated a while back a perfect example of an assertion based engagement or an attestation engagement is that of a financial statement audit. reflect again on how it is possible for us, or for management rather, to generate and to come up with unaudited financial statements. And then here comes the auditor, of course, evaluates, audits the financial statements, eventually comes up with an audit report. Yes? If we think about a direct reporting engagement, an example of this is, well, perhaps you might have heard of this one, but is in the requirement of the Sarbanes-Oxley Act, particularly that coming from the PCAOB, which requires an evaluation of a company's internal controls, particularly the effectiveness of its internal controls in terms of financial reporting. Now, in SOX and in PCAOB requirements, the practitioner, aka this time the auditor, does the direct evaluation and measurement of the effectiveness of his or her client's internal controls, and eventually reports this one in the assurance in the form of an assurance report. Meaning to say, at the very onset, the company or the client does not have a measurement of the effectiveness of the internal controls. It will be the auditor who will directly perform the measurement. And as a product of his direct evaluation and measurement, comes up with an assurance report, aka, the assurance and the subject matter information can only be made available if there is a practitioner. Another possibility would be it's possible for the company to have measured the effectiveness of the internal controls, but then this report is not available to the intended users unless it has already been audited, it has already been examined, it has already been evaluated by a practitioner. So you get to see the main difference between the two really is, for the nth time, the availability of the subject matter information to the intended users. Now, our framework has provided us with an illustration. So this illustration is something I lifted from the framework for assurance engagement. So supposing we have here companies 1 to 10, and these are their proven oil reserves. I would suppose this would be in barrels. If this were an assertion-based engagement, then each of these 10 companies would measure the oil reserves and then will provide an assertion in the form of a subject matter information to the practitioner and the intended users. Or it's possible that an entity other than companies 1 to 10 would measure the reserves and would provide an assertion or a subject matter information to the practitioner and the intended users. Again, the subject matter information is available to the intended users. As compared with a direct reporting engagement whereby two possibilities may exist. First possibility, each company does measure the reserves, they provide the practitioner with a written representation. Practitioner measures the reserves against the established criteria, but then this representation, this assertion, this subject matter information is not available to the intended users. Another possible scenario would be that the practitioner directly measures the reserves of some of these companies. And because, well, it's the practitioner who directly measures the reserves, then most definitely you would need the practitioner for the subject matter information to be communicated to the intended users. So that's the difference between assertion based engagements, which we lovingly call attestation, that is its nickname, and direct reporting engagements. So again, if we put into perspective then, what is the difference between assurance, attestation, and audit? Well, assurance is the broadest concept. Assurance refers to three-party contracts because we need to have a three-party relationship in which an assurer or a practitioner reports on or improves the quality of information, and this information is the responsibility of somebody else and is going to be used by a wide variety of intended users. In contrast, an attestation is a type of assurance service. So it is an assurance service, but it is a type of an assurance service in which an attestor, usually an independent accountant, offers assurance about a subject matter that is the responsibility of another party. An audit, on the other hand, is a type of an attestation engagement, which involves a systematic process of objectively obtaining and evaluating evidence regarding assertions about economic actions and events to ascertain the degree of the correspondence between the assertions and the established criteria and to communicate the results to the interested users. I would very much rather draw out the differences amongst these three by presenting this illustration. And I love to call this one the assurance alien. You will get to see later why I call it as an alien. But imagine that this is the assurance universe. So we have here an entire plethora of assurance engagements. Now, there are two classifications of assurance engagements, if you must remember. The first one is assertion based, and the second one is direct reporting. Okay, so assurance engagements could either be attestation or direct reporting engagements. An example or examples of attestation engagements are audits, reviews, and other assurance engagements. That is why I call it the assurance alien. It does look like an alien from my vantage point. Okay, so therefore, we can say then that all audits are attestations and all attestations are assurance engagements. But we cannot say that all assurance engagements are audits. That is not true because there are other assurance engagements that exist which are not audits. Example, reviews or other assurance engagements or even direct reporting engagements. So this is how I would like to illustrate the difference between these concepts. So assurance engagement is the broadest, okay? And audits is just one of the many assurance engagements that fall under attestation. Now, another interesting thing that we can reflect on is how outside of this assurance universe, outside of this assurance alien, there actually exists in its orbit a different set of services that we normally call non-assurance services. But then the more technically correct terminology for it will be related services. Notice that they exist very closely to assurance engagements, but somehow they just couldn't enter the assurance universe. And Filipino, this is what we call yung mga ipinagtagpo ngunit hindi itinatadhana. These related services or non-assurance services cannot enter the assurance universe because it has failed to meet at least one of the five elements. Okay, let's give some examples of these related services. For example, we can talk about agreed upon procedures. Agreed upon procedures would be an engagement wherein the nature of the procedures are actually audit. The procedures are audit in nature. However, the difference is that the practitioner and the responsible party get to agree upon, that's why it's called agreed upon, get to agree upon the procedures that will be performed. Therefore, what we said in the previous video where the auditor has access to any and all unrestricted procedures, that is not true in the case of agreed upon because it has to be agreed upon between the practitioner and the responsible party. But the thing that makes agreed upon procedures a non assurance engagement is this. While the procedures are audit in nature, the practitioner does not give any assurance at all. The report of the practitioner comes in the form of a report of factual findings. That's the report. It's called Report of Factual Findings, where the practitioner simply outlines, lists, communicates to the readers what the practitioner was able to find. There is no opinion, there is no conclusion. The readers or the users are free to make their own conclusion coming from the report of the practitioner. That's why agreed upon procedures are not assurance services because they do not give any they do not give any conclusion, they do not give any level of assurance. Another non assurance service or related service is that of a compilation engagement. Whereas agreed upon procedures utilize procedures that are audit in nature, a compilation engagements, on the other hand, utilize accounting expertise rather than auditing expertise. So, in the case of a compilation engagement, this is where you transform a very detailed trial balance, for example, into, say, for example, financial statements with the correct line items. So that's why sometimes it's called other than the name compilation, it can sometimes be called as an assembly, no, where you convert very detailed, very disaggregated data into a more formal aggregated format. So a compilation engagement then is not considered as an assurance engagement because it also does not give any assurance at all. And also, what is being used is accounting rather than auditing expertise. Another type of non assurance engagement, which I think you may be familiar with, is the preparation of tax returns. There's no testing, there's no evidence gathering, it's simply a preparation of tax returns. So, therefore, it cannot enter the assurance universe. And other non assurance services would, of course, come in the form of consulting or consultancy services, whether it be tax consulting, management consulting, other advisory services. They cannot enter the assurance universe because no assurance is given. And there is also only a two-party relationship. That is the responsible party and the consultant or the practitioner. Okay, so this is essentially, in a nutshell, the difference between assurance engagements and related services or non assurance engagements. To give better perspective, let's compare audits, reviews, agreed upon, and compilation, taking note that agreed upon procedures and compilation are examples of related services. Notice in the case of audits and reviews, the practitioner does give some level of assurance. In the case of audit, high but not absolute, we call that one reasonable assurance. In the case of a review, it's moderate, or we call it limited assurance. No assurance is provided for related services. In the case of the report provided, an audit does give a positive assurance. No? In my opinion, the financial statements present fairly, or in my opinion, the financial statements do not present fairly. So it's a positive assurance on the assertions. Reviews, on the other hand, because of the limited procedures that can be performed, as you can very well see, only inquiry and analytical procedures are used in a review. And so, because of this one, the practitioner only gives a negative assurance on the assertions, which would state nothing has come to my attention that would make me believe that, right? So that's negative assurance. In the case of agreed upon procedures, only factual findings are presented, only procedures agreed upon are done, okay, or are performed, and the readers, the users of the information, are free to make their own conclusion. In the case of a compilation, it's the reduction of detailed data to a more manageable, understandable, formal form, okay, and the report provided is simply an identification of the information compiled. Features of auditing, of course, the opinion of the auditor will enhance the credibility of the financial statements. In the case of a review, audit skills and techniques are applied, but to a limited extent. Particularly, there is no assessment of accounting and internal control systems. Only inquiry and analytics are done. In the case of agreed upon procedures, like what we have said, the recipients of the report must make their own conclusions. And because of this, and because of the fact that the procedures are limited and agreed upon by the parties concerned, the report may even be restricted to those who are privy to the details, no, or the choice of the procedures. And in the case of a compilation, accounting and not auditing expertise is being used. With that, we are done with our discussion on the types of assurance engagements. And while I'm very excited to jump into the introduction to auditing, I think it is best that we put a momentary stop to our conversation. Maybe take a momentary breather, or if you're good to go, then head on over to the next video for the continuation where we will talk about the introduction to auditing.